So now that we've taken a look at a candlestick chart with the wave overlay within the look back, let's add that next layer. And by doing that, I'm hoping what you're going to see, as you compare this chart to this chart here, I'm hoping what you're going to see is just that extra layer of visual analysis that allows us to see. Let me show you here. So I just want you to know this is let's make sure we're comparing apples and apples here, shall we? So here's a 30-minute Euro US dollar, and here is a 15-minute Euro US dollar. So notice, as I've got both these on, once I go into look back on this chart, we had talked about how the transition or the rollover had occurred where, again, prices visually look like they just kind of roll over. In other words, the markdown transitions into more of a sideways market when you look at the wave angle within the look back. I can't stress that enough. So look back again for a 30-minute chart is 1 to 2 weeks. Usually you'll find that when I'm looking at a 30-minute chart, I'll probably favor around 7 to 10 days. Now notice here, we have the same section of the chart. In fact, let's go ahead and put these side by side. And you'll see what I mean. So you'll notice, let's go ahead and make sure we're looking at the same dimensions here. So you'll notice that we have the downtrend, and once prices crossed over the wave, notice here on the left, once prices traded lower, they crossed down through the wave, we didn't necessarily get the 4 to 6 o'clock angle right away, but as prices persisted for a handful of candles, notice the rollover. It's kind of a rounded topping action. Okay, you see that? And eventually the wave follows suit because, of course, the wave is a reflection of price action. So once I have broken wave support, I had gone from what was an uptrend, strong market, to neutral, to now on the weak side of the wave, a downtrend. Now let's take that same price action. Let's take a look at it. I want to put it in the same perspective. And you'll see here the green color coding of the GRaB, G-R-A-B, green, red, and blue. That's where I get GRaB from. So this GRaB chart, this is what I call this chart here. It's a candlestick, but with the GRaB overlay, it becomes a GRaB chart to me. And what I'm looking at now is the markup cycle, the transition here, as the candles go blue, the transition to more of a neutral market, to finally going red, showing me the weak market. Now, how do I know the difference between a reversal and a correction? From green, blue was the correction. The correction quickly turned into a reversal as soon as we went red. So uptrend, correction, reversal as the prices go red. And you'll notice there's another subtlety of the GRaB, and that is up candles are shaded in a lighter color, while the down candle is shaded in a darker color. So if you were looking at a typical, well, let's look here. If you're looking at a typical shaded and unshaded type candle, unshaded or hollow is up, the shaded is down. Here, rather than shaded and unshaded, we have light green, light blue, dark blue, light red, dark red to differentiate an up or down close of that particular candle. So it's the same chart. Do you need the overlay? Not necessarily. You know, it's pretty easy to see that prices have broken the support of the downtrend. But again, what I'm coming back to is the reality, at least my reality, and it might eventually be or currently be your reality, which is looking at multiple charts, multiple time frames, trying to make these decisions in real time as quickly and as accurately as you can. Now, how nice is it to be able to just glance at a handful of charts and say, yep, I'm neutral, yep, I'm negative, yep, I'm strong. Of course, you're going to take the wave angle, but at least I know where prices are in relation to the wave, so there's a certain amount of sentiment that I get with the GRaB. You know, when I first switched from I used to look at many years ago, I used to look at Western bar charts or bar charts. And certainly I have a certain idea of open and close, but all I get is this little tick to the left and right. I didn't think it was telling much of a visual story. You know, I didn't think I was taking much of a step up from really a line chart with this kind of look. And there's times I look at line charts, plotting the close, but I didn't really feel that I was taking much more of a step up from a line. I started using candlesticks at the prodding of a friend of mine, and it was kind of difficult at first, but then the longer I looked at it, it told a better story. And in all due respect to candlestick charts, I think the GRaB, again, tells a better story in relation to the market cycle analysis that I rely on from the 34 EMA wave. So again, it's just another layer. Here's my strength, here's my neutrality, here's my weakness. Now imagine if you had none of this on here, you know, if you did not have the wave on here either, what type of story it would be telling. So to me, the wave plus the GRaB, I'm able to assess a number of markets very quickly. I'm not going to have a series of red GRaB candles plotting without seeing a 4 to 6 o'clock downtrend. Now, are there situations where I could, where prices are moving sideways but they're trading just below the bottom line of the wave? Sure. I can tell you in recent memory, can't even recall. So I'm not going to be seeing a series of, again, a series of, not one, but it's got to be a series of red candles that aren't indicating a downtrend, or a series of green candles that aren't indicating an uptrend. Usually when I see those colors in succession, same with the blue, if I see a lot of blue, if I see blue dominating current price action, I've gone neutral. And if you notice, within the context of this downtrend, notice here, we have a downtrend. The market cycle did shift, transition a little bit here. We went to basically a 2 to 4 o'clock angle. I can see that even clearer with the wave coupled with the fact that I was going red to blue in this area. So what can I assess from this red to blue GRaB action here? Bearish to neutral, and this was arguably bearish to neutral. This was a pause in the market. There was still very much a bearish sentiment. If I was looking for a continuation, I'd be looking for some sort of resistance to hold or some sort of support to break down. But again, compare the visual, and I think you'll see how the GRaB just gives you an extra layer of analysis. Currently, look at the right edge. I know that I'm looking at 2 to 4. What is that next layer of 2 to 4? We're actually bullish to neutral. Here we were bearish to neutral. Here we're bullish to neutral. So when you look at the current price action on the Euro-US dollar, 30-minute chart, bullish to neutral because I have the green and blue. I don't have really a succession of green, not much. So I can't say that I'm in an uptrend, but with the blue dominating current price action, I'm looking at a neutral market.